market structure is not all about higher highs, higher lows for a bullish structure and lower highs and lower lows for a bearish structure. It goes beyond that, and in this video I'm going to show you how to use market structure to determine the directional bias of the market, and by so doing you are going to increase your win rate, your overall performance, and then you have confidence in trading the forex market. In my last video I started this free SMC course just for you, to say thank you for your support and love. And in today's video I will talk about strong high low and weak high and low. Market structure is very complex. Before I explain strong high and strong low, I want to quickly introduce you to what they call major structure and minor structure. Major structure is simply the overall flow, the overall order flow of a particular market in a particular time frame. For example, on Euro USD, the overall structure of this weekly chart is still what? Bearish, because these are the major structure. We have the high here, we have the lows, we have high here, we have the lows, we have high. This is not the low because the market didn't take out this. Instead, we have the next low here. This was the last high that was created, and for the structure to break, we need to close above that structure that was created, the high. And this is the leg. We created this high here. This is not a low because it didn't take out this. Okay, now the next low is this. Okay, now we are pushing up. So technically here, within the minor structure we are bullish, but overall major structure of this pair is bearish. You can see the confusion when it comes to market structure. But in today's video, I'm going to show you how to break this down in order to predict this move, know where it's going to turn, and also continue the bearish move. Okay, now right now price is here, and this is the high we need to break on the weekly major structure to turn what? Bullish, and then we move. Okay, so this is the major structure. However, within that weekly zone we have minor structures. Okay, now within this big weekly move, this leg of structure down, we have minor structure, which is this here: high, low, high, low, high, low, high, low, yeah, high, yeah, low, yeah, high, yeah, low, yeah. Okay, and within that minor structure we have broken the minor structure high starting from here, and that's why I say this pull back to the upside. Okay, so this is simply the minor structure. A lot of people confuse all of these and say, okay, the weekly market right now is bullish just because it broke the minor structure. No, it's bullish actually, but the major structure is still intact. So you won't be blindly trading bullish price, especially when you get to these zones here. This is the origin of that move. You know, in my last video I taught you how to determine the origin of a leg of structure and how to determine the 50% zone, which is simply the flip zone. When I say 50%, I'm used to using the word 50%. Is actually the flip zone, that area that took out the lows. For example, for the major structure now, let me put this here. This is the leg that we broke. Now this zone is a 50% zone that what took out this area, and you can see when price came back it retraced, and eventually we broke above that and we are pushing to the origin. Okay, so you should know all of this. We are pushing to the origin. So how do you read market structure both on the major level and on the minor level? That is what I want to show you in this video, which is strong high, low, and weak high and low. Now let's explain what this is. By strong high, we simply mean an high that took liquidity. This I took out this liquidity, this equal I, and broke structure. Those are the two criteria for a strong I. A strong I must take out liquidity and it must break structure. So this strong I, some people will call it protective I. This is where you can place your stop loss with the higher percentage that it will not get hit. Why? Because you consider it a strong I simply because it took out liquidity and it broke structure. A strong low, on the other hand, is simply the lows that also took liquidity and broke structure. Okay, we have equal lows here, liquidity or like trendline liquidity. This low took that liquidity, and then from that low we have a break of what? Structure. So in this case we have a strong low at this level. What does it mean? It simply means that you can place your stop loss below, and then you know that price will not take out this low with a higher probability that this low will hold, even if price heads to this point here. You have confidence in pulling the trigger here and placing your stop loss close. Back then when I started SMC, I liked going for a very tight stop loss just because of this concept alone. Okay, so your weak low and weak high are then what? The weak low are simply the low produced from a strong high. When you have a strong high, the low it will produce is a weak low. And also, that's the first criteria. And the second criteria, that the low fails to break structure. Okay, weak low fail to break structure. Now, I want you to look at something here. Let's break down this price action here. Now, we understand that this market is what? Bearish. But however, looking at this place here, this pullback started as a result of what? A strong low being created here. Why? This low took out this liquidity and broke structure. And most people call this is a chalk. A typical chalk must take liquidity and break structure. And then that means you can take a trade from there. Now, what most people don't know is this. Because you have a strong low and a weak high, that doesn't mean you should risk the same amount of trade on this particular trade there. Why is it so? This low is also a weak low from the major leg down. So, if you are trading this pullback, the probability of this trade succeeding will be lower compared to if you are trading off the strong high that is in line with the overall trend. Hope you understand that. So in this case, you can take this trade. It gives you a reaction. This should be for just scalping, and then you reduce your risk here. The reason is because though it is a strong low, is also a weak low from that leg of structure. So because you have that two conflicting ideas, the probability here of success is lower. Hence, you should reduce your risk. This is what a lot of people don't understand. They just, this is a strong low. They zoom to the internal structure of the market and they trade it because this is the internal structure. Whereas the overall major structure is bearish. So now, a weak eye is simply an eye that fails to break structure. Okay, for example, we have a structure going up. This is an eye. It fails to break the structure and it was produced from this strong low here. Two things for a weak eye is that it comes from a strong low and it also failed to break structure. So by the time we look at the chart, we understand this even more. So let's go to the chart. Now looking at this weekly chart, okay, market is fractal. Why I'm choosing this higher time frame is because they are cleaner to explain. And when we come to the advanced market structure, I will zoom down to the lower time frame so that you have a better understanding of a complex nature of what price action. So now let's look at this. Remember, we confirmed that overall major structure of this bearish of this Euro USD is bearish. And where is the leg that we are looking at? We are looking at this leg here. This is the eye that eventually took out this low here. Okay, not this eye. This is not the eye. This is the eye, because the price, this is the week low. This is, it came up here. This was a week low. Now let me start from here, so that most people don't understand. They think chalk is everything. No. Now, having established that let's start from here. That is clear, because we don't have any other data from this point. So let's look at here. We broke structure with this eye. This eye broke structure. Once you have A, B, C, D pattern, A, B, C pattern, okay, A, B, C. When you have that A, B, C pattern, you have a structure playing out. Okay, in this case, this is a bearish structure, and if it's like this is a bullish structure. Okay, so let's continue. So in this case here, this is the low that we need the market to take. Okay, this is the low we need market to take. Now price move up. Let's zoom in and see what took place there. Now zooming in, we are going to see we have different structure here. We have this eye that produces low. So this is the internal structure eye. This is the internal eye. And then this is the origin. Now, as you can see, most people will start here and say, okay, we have a market structure break here. Okay, this is a strong eye. Yes, this is a strong eye because it took liquidity and broke structure. All right. So you can simply mark out these zones depending on how you trade. I will teach you on the PO high maybe in the next video. But for now, I want you to understand structure and everything about structure that you need to know. Okay, so now we have this here. Market came down, created a high. This low here is a weak low. Why? It fails to break structure. Weak low in the internal structure. So you can use your idea of strong high and weak low to trade within the internal structure. This is a weak low, failure to break this high. So this high here now broke this low, and obviously it has taken some form of liquidity in terms of candles. Okay, then we also have this a point of interest you can be trading off from. Okay, this high produced this low here. This low failed to break structure, and then in that case it becomes liquidity. We have a break there. This is a strong high. Price came up. You can still trade within it, within that minor structure to take the price down. So this is the last high, last weak high and strong high that produced a low. Okay. Now this market move up, came here. Let's make it neat. Now we'll be looking at a way to take a trade somewhere here from this zone here. You can take a trade. Now let's assume you took a trade there. It came down. What happened to this eye? This eye failed to break structure. You can see the complexity now stepping in. Weak eye. Why? It fails to break this low. Okay, or any sort of low here. Because it failed to break that low, it becomes a weak eye. And when you see a weak eye or a weak low, they are simply target. Take note, weak eye and weak lows are what? Target. You can then decide to, whatever reason you have here to take the trade, because I will still teach you strategies later on. Because this is a weak eye, it becomes liquidity. Market needs to take it. And unfortunately, it created what? and equal highs here, which makes this POI a lesser probability to trade off from. That is another lesson for another time. The moment you fail, a POI fail to do its job of breaking structure, it becomes low probability POI. And that's why you see this price move blast it, creating what? A structure. This is the low that created that. This becomes a strong low. And it becomes what? A tradable area to continue looking for trades. Now, most people will be lost in this bullish move. They will think that, oh, now the Euro USD is now bullish. I have to buy. I have to keep buying. Not knowing that this is simply a pullback in the major structure that have a stronger point of interest in here. Okay? So even though you are buying here, you have taken out the 50% level, we have the origin to deal with. This I've taught you in the last video. If you have not seen it, make sure you go to the description or check my channel. I did a lot of video on that, and then you watch it, then come back here. So far, if you like what I'm showing you, what I'm teaching you, make sure you like, subscribe, and then share this video so it can reach out to other traders just like you. So as you can see, we have what? A strong low here. This is a weak high. Why is it a weak high? Because it was produced from a strong low. And secondly, it did not break structure. It didn't break this low. So this becomes a target. So when you're buying here, you can target up here this liquidity, and the price move up. This is a strong low again because it broke structure. Now, order flow has changed. Let me take off this. The order flow has come to the origin. So therefore, this is a strong high that produced a weak low. This is a weak low. Forget the fact that it broke structure here. It didn't break the major structure. The major structure, when you're looking at the major structure, this is a weak low. Okay? I hope you are not confused. If you are, let me know in the comment section. This is a weak low here. And this is the target. This is where you're targeting when you're selling from here. Now, because price has gotten into the major structure point of interest or point of origin, then you can have a minor structure playing out from there. From there, you start monitoring where do we break. We broke this low. This is a strong high. This is a weak low. Then you start there again using that weak low, strong high concept to trade the internal structure move or the micro market structure. So in this case, we have a point of interest here. Whatever strategy you are using, supply and demand, fair value gap, whatever it is, you must first of all understand this. So price move up, tap into your point of interest, and then you monitor this level. Make sure that this level is broken. Okay. First of all, it took out this low. This is the liquidity target. It moved up. Failure for this low to break this high, it becomes what? A target. So you can continue moving lower, creating what? A low, a break of structure, internal structure. Then remember a point of origin, and then your flip zone. This area took out this. You can see price came in here. It's not all the time price will be coming to your origin. You use probability to trade this. You can trade this. If it take you out, then you sell from here. Everything is probability and trade management. So from this high, we have a weak low. This is a weak low. Why? Put it in the comment. Good, because it fails to break structure. So this becomes what? Target. Your weak lows are target. Okay? Then from this high, we broke structure. This is a strong high. This is a weak low. Why is it a weak low? First of all, it produced from a strong high. And secondly, it fails to break structure. So price reacted from the flip zone here, went low, broke structure, and so on. Okay? And so forth. If you continue like that, you understand that now, where is the low we want to break? This is the low. Yeah. We want to break from this move here. So the market is still bearish until we take out this I. So as long as we do not take out this I, we should be looking for bearish setup, especially when you come to the point of what? Discount. For example, that's 50% level. So let's look at the Fibonacci here. So this is the 50% level. Yeah. So anytime price trades above here, it should give you a clue. Let me take it out. That you should be looking for what? Short. Okay. When it comes lower and probably failure to break this low and you have a shift, you can look for bullish price up until you get to the equilibrium point. Now let's continue this. We have a strong eye here. Was broken. Okay. Creating a weak low. This weak low failed to break structure, got broken. Now we have a strong eye here that was broken now. Now because this was broken, this becomes what? A strong low within the internal structure. Take note. It has a lower probability of success rate if you really want to trade from here. Why? Because the overall market is what? Bearish. That's what I explained in my previous, maybe some minutes back. So now, in this case, you can keep buying. Strong low, weak high. Strong low, weak high, target. You take it out. Weak, this is a, in this case here, we have here our strong low where we can trade off from. And then from there, let me don't look at all the pieces. Okay, we have a break of structure here. So in this case, we have a new strong low. Probably you can adjust it here and something like that. But as price trade back into premium zone, you have to be very careful. The moment you see a shift in the internal structure, like you can see here, we don't have any shift yet. This is low. Price move up, didn't break. Came back down, move up. We don't break yet. Now, moment price took out this eye, you can see this eye was taken, and then we have a break of the internal structure. We have a chalk here. Now we can continue moving in line with what? The overall major structure. So the major structure now is in line with the internal structure and is also within the premium zone. Now that is in the premium zone, you can sell strong high, weak low. That makes this point of interest here low probability. I'm not saying it won't work. It could tap in here and move up and then come back. But what I want you to know when you are trading is all about probability. And the moment you can put probability in your favor in terms of knowing which setup is high probability trade setup and which setup is low probability trade setup, it will help you a lot. You won't be looking for other blocks in here. The moment you do that and you feel, oh, other blocks do not work, supply and demand do not work. Look at demand there, it didn't work. This and that, you start winding up, crying. No, it's because you don't understand the major and minor what? Structure. So the major structure is still bearish. The minor structure is bullish. Okay. Now, we have a strong eye, we broke structure here. Now, you can see all of this. If you are to look for bulls, all the bulls in here, meaning buyers, have been stopped out. Okay. This is the leg of structure here. The major leg, it produced a minor leg here. Okay. As you can see, what happened? The market is still what? Bearish. Despite the fact that we break structure here on the weekly. You know, some people will think the weekly is bullish. We have to be bullish and we are going to the moon, especially if this is a crypto asset. No, there's no moon. Okay. It's simply an internal structure what move, which when price switch again here, this becomes a target because it's a weak low on the major structure. This is a major structure leg. High, strong high, weak low. Strong high, weak low. Now within the internal structure, this is a strong low because it broke structures. But if price come back to the 50% level, Fibonacci, boom, 50%. This is where you stop most of your what? You get not really to stop, you start to question your bullish bias because you are in the territory to sell from the 50% level. Is premium. Then from there, once it breaks, goodbye. That's where the beginning of the major structure move begins. And you can see price came back and we are pushing lower. We have broken new structure. Now, this is the high that we want to break. If you really want to see a major structure shift in Euro USD, you want this high to go. So currently, what we are experiencing right now is simply internal structure bullish price action on Euro USD. And take note, you have to measure. We are in 50% level. Okay? You have to be careful here. The moment you see a shift in the internal structure, then we will continue going lower. Okay? So, if you have any question on this concept, let me know. If you need more examples, let me know in the comment section. Maybe I will use trade examples to illustrate my analysis even further. If this makes sense, give me the like so that I will continue to make more free SMC course video for you. On that note, I will see you in this video.